Hello. Today I'd like to talk about a venture capital firm that's doing things a bit differently. I want to introduce you to Helarctos Ventures, a Canadian seed stage VC firm that is not just investing in startups, but investing in visions that could reshape our world. To understand the impact HV is making, we first need to take a closer look at its original origins and core principles. So let's dive right into the roots of its remarkable venture capital firms. So this page is talking about the company background. And HV was founded in 2013 by its managing partner, Joe Bosman. HV is a seed-stage venture capital firm based in Canada that specializes in investing in early-stage technology startups. The firm manages 25 million and has invested in 28 companies, 6 of which have been acquired by other companies. HV focus on disruptive mobile-first products, software as a service (SaaS) model companies, and high-potential frontier technologies. The firm's mission is to identify startups with big visions and potential to make a significant impact in the market. And HV aim to add value to its portfolio expertise. The firm strive to create a symbiotic relationship with entrepreneurs and be active and engage investors. And this one is a simple table of HV's background, so it's easier for you to understand their background. Now that you have a sense of what HV is all about, let's delve into the nuts and bolts of their investment strategy. Investment strategy, a resource-based view on HV. HV has crafted a multifaceted investment strategy that concentrates on 3 key areas: disruptive mobile-first technologies, just like I mentioned before, software as a service (SaaS) enterprises, and frontier technologies with high growth potential. This strategy is deeply rooted in HV's core principles and vision, aiming to identify startups that resonate with the firm's long-term objectives. And now we focus on HV's comprehensive strategy. The first one is market-centric approach. Leveraging market resources, one of the pillars of HV's investment strategy. It's focused on market potential. The firm employs a rigorous methodology to access the total addressable market (TAM) and scrutinize the startup plan for market penetration. This is aligned with the resources-based view, which emphasizes the importance of market-based resources, like customer relationship and brand equity. HV is particularly interested in startups and offer innovative solutions to market-specific problems, especially those that are mobile-centric. The firm believes that market-driven startups have the transformative power to redefine existing industries, sustainable competitive advantage, in internal resources as defensibility. And another cornerstone of HV investment philosophy is concept of defensibility. HV seeks startups that have a strong internal resources base, characterized by unique intellectual property, strong customer relationships, or high switching costs that create competitive moat. This aligned perfectly with the RBV theory, which point that firms with unique and inimitable resources have a sustainable competitive advantage. HV's focus on defensibility is not just strategy, but a long-term commitment to ensuring that their investments have a lasting impact. And let's move on to team evaluation. Human capital as a key resource, HV place high premium on equality of the business team behind each startup. According to RBV theory, human capital is vital internal resource that are not only passionate and competent, but also deeply committed to the startup's vision. A crucial factor is the team's ability to attract and retain top-tier talent, which HV views as a sign of a startup's ability to grow and long-term viability. And now we talk about rigorous due diligence. Information as a resource. Post-initial screening, HV engage in an exhaustive due diligence process that involves the detailed analysis of the various facets of the startup. The firm tap into its extensive network of experts, limited partners, and other stakeholders to gather additional insights. This is consistent with the RBV theory, which considers organization knowledge and the information system as critical internal resources. HV's meticulous due diligence ensure that firms make well-informed investment decisions. And now we can talk about value addition and mentorship, network and expertise as strategic resources. HV goes beyond mere capital investment to add sustainable value to its portfolio companies, utilizing its vast network and expertise, key organizational resources according to RBV. The firm offers invaluable business development support and mentorship. This cooperative approach aims to foster growth, innovation, and market leadership, turning startups into industry disruptors. And the last one, deal structure, financial resources, and governance. In terms of financial commitment, HVs typically invest between 5,000 and $1 billion in exchange for equity, usually secured through preferred share or convertible notes. Often, HV also gain a seat on the startup board, ensuring a governance structure that allows for active participation and strategic alignment. This approach ensures that both financial and governance resources are aligned for mutual benefit. And for the whole, after the summary of the strategy, I'm going to give you, in summary, HV employs a resources-centric investment strategy, deeply aligned with the principles of resource-based view. The firm focuses on startups with significant market potential, robust internal resources, and strong teams, aiming to create a symbolic relationship that benefits both parties by leveraging its own internal resources, such as market insight, human capital, and extensive network. HV sets the stage for meaningful partnership with visionary entrepreneurs, thereby driving transformative change in the tech startup landscape. Now, it's time to talk about their key aspect of their approach. This slide discussed several key aspects of their approach. The first one is symbolic deal. HV emphasizes the importance of creating a mutually beneficial arrangement with entrepreneurs. They aim to more than just financial investors and seek to align their interests with founders. Second, value add. HV wants to add value to the companies they invest in, avoid being dumb money. They aim to create a mentoring relationship with founders and leverage their extensive network of contacts to assist startups in areas such as business development, talent acquisition, and accessing capital. Third, deal structure. HV seed stage in investments typically range from $5,000 to $1 million in exchange for equity ownership ranging from 10% to 15%. They expect to commitment of 7 to 10 years from entrepreneur and aim to strike a balance between equity ownership and motivation for the founding team. Investment instruments. HV secure its investments through preferred shares or convertible notes. Preferred shares provide higher claims and on asset and earning, while convertible notes automatically convert to preferred share at the close series of financing. The choice between the two instruments depends on specific negotiations. And the fifth, board representation. HV typically request a seat on the startup's board of directors, while founders retain control at the seed stage. Having a board seat allowed HV to provide guidance and oversight. And now let's move on to future outlook. At the heart of HV investment philosophy lies a visionary perspective that intricately tie together the various elements of opportunities assessment. Central to their criteria is unwavering commitment to identifying startups with audacious visions. HV looks for teams of entrepreneurs who are highly motivated, never give up when they faced with problems, and are focused on creating something really big. What set HV's visions apart is its close alignment with potential market size. In stock contract, the merely seeking out companies with modest growth aspiration. Joshi and his partners passionately pursued firms with the transformative potential to rival tech giants such as Google, LLC, or Facebook. In the words of Joshi himself, we inspire to back companies that not only dream of making a difference, but are determined that make a dent in the universe. This visionary approach underscored HV commitment to fostering innovation and progress on a global scale. Their investment decisions are guided by the belief that groundbreaking startups, led by teams with big goals, have the power to reshape industry, disrupt traditional paradigms, and ultimately leave the indeniable mark on the world. In a sense, HV's vision transcend to traditional investment criteria, fueling their missions to support ventures that strive for nothing less than a transformative impact. Okay, let's move on to the last part, conclusion. As you can see, HV is a forward-thinking seed-stage venture capital firm with a clear mission to identify and support startups and the process, the potential to make a substantial impact on the market. Founded in 2013, HV has successfully managed a 25 million fund and invested in 28 companies, and their 6 of which have been acquired. Their investment strategy is anchored in a market-centric approach, prioritizing defensibility, team evaluation, rigorous due diligence, and a commitment to adding value through mentorship and network access. One distinguishing feature of HV is its dedication to creating symbolic relationships with entrepreneurs, emphasizing mentorship and striving to be more than just a source of capital. They carefully structure their deals, typically investing between $500,000 and $1 million in exchange for equity, and often securing a seat on a startup's board. This approach ensures active involved and strategy alignment. Furthermore, HV's visionary outlook sets them apart, as they actively seek out startups with bold ideas and transformative potential. Their mission is support ventures that aspire not only make a difference, but to leave the undeniable mark on the wall. In a sense, HV represents a unique and a comprehensive approach to venture capital, with a focus on fostering innovation, supporting entrepreneurs, and driving transformative change in the tech startup landscape. Thank you for your listening. This is end of my case study. Thank you.